Here's a quote from Dan Robinson, a developer deep in the world of DeFi, or decentralized finance. And it perfectly captures the wild, high-stakes reality of finance today, a world where a single joke can have very, very real consequences.
We are going to dig into exactly that. But honestly, that's just one of 3 dispatches we've got for you today from the front lines of finance. 3 stories that really show just how fast the world of money is changing. So, welcome to Fintech Frontlines. We're going to be looking at a social media giant invading Brazil, a quiet but powerful revolution happening in construction, and yeah, a crypto prank that went way, way too far. Okay, let's dive right into our first story. We're heading down to South America, where an app you probably scroll through every single day is making a massive, and I mean massive, power play into the world of finance. This number right here, this is everything. 131 million. That's the number of adults in Brazil that TikTok can hit, just like that. You gotta understand, this isn't just a potential customer list, it's a pre-built empire just waiting for them to launch a financial product. And this quote just nails it. TikTok doesn't have to build an audience from the ground up like everyone else. No, it can just flip a switch on its platform and, overnight, become one of the biggest financial players in the entire country. And listen, this isn't just some theory. ByteDance, TikTok's parent company, has already applied for 2 really important licenses from Brazil's central bank. The first one is to handle payments and things like prepaid accounts. The second, to become a direct lender. I mean, this is a full-on 2-pronged attack. So what this does is set up this incredible showdown. On one side, you have Nubank. They're the beloved local champion. People call them the Spotify of finance in Brazil. And on the other side, you've got this global giant, TikTok, the YouTube, which is so big it can just decide it wants to get into the game and compete immediately. But don't get it twisted, Nubank is no pushover. I mean, look at these numbers. Revenue up 45%, net profit climbing 50%. This is a powerful, profitable, fast-growing company. This is not a David versus Goliath situation. This is Goliath versus Goliath. So here's the bottom line. TikTok is trying to own all the money that flows through its incredible ecosystem. This is a battle for the financial soul of the world's most engaged social media platform, and Nubank is standing right in the path of that bulldozer. All right, let's shift gears for our second story. Now, this one might seem a little less flashy than a social media war, but it is a perfect example of how tech is quietly turning a massive, old-school industry completely on its head. Okay, but first, we have to clear something up, because it gets confusing. You've probably heard of Bilt Rewards. That's the company that gives you points for paying your rent. This is not that. We're talking about Bilt Technologies. It's a B2B company. They make the software that banks and builders use to manage construction loans. Totally different worlds. And Bilt just landed a whale. U.S. Bank, the 5th largest bank in the entire country, has officially partnered with them. And folks, that is a huge signal to the rest of the real estate and finance industry. So, why is this such a big deal? Well, for forever, construction lending has just been a total mess. We're talking endless phone calls, stacks of paperwork, constant delays. Bilt comes in and replaces all of that with a single platform, where the borrower, the builder, and the bank can see exactly what's happening in real time. And now, get this, they're even adding an AI agent to automate the whole thing. So here's the takeaway. When a bank the size of US Bank decides to run its entire construction lending operation on one specific fintech platform, it basically sets a new standard for the whole industry. Everyone else is now officially playing catch-up. All right, for our final story, let's circle all the way back to that quote we started with, and the disastrous April Fool's joke that had very real and very immediate financial consequences. So this is what Liquidity Protocol posted. It's a totally fake announcement. It claims that Circle, a huge player in the stablecoin market, crypto that's supposed to hold a stable value, like being pegged to the US dollar, was buying them. Now, Circle immediately said, nope, not true, but the damage was already done. Just look at this chart. In the minutes right after that fake news dropped, Liquidity's own token, LQTY, shot up 5%. Then boom, once everyone realized it was a joke, it crashed, ending down 6%. That is an 11% swing in minutes. A classic, even if it was unintentional, pump and dump, all from one bad joke. So you have to ask, what was going on here? Was this just some dumb prank? Well, not exactly.
The joke was actually a very sharp, very specific critique aimed squarely at their competitor, Circle.
See, this fake announcement was designed to hit Circle on two of its biggest weaknesses. That whole non-freezable part, that was a jab at Circle for recently freezing user wallets. And mentioning the Clarity Act, well, that's a proposed bill that could threaten Circle's entire business model. It was a direct shot at the regulatory storm clouds gathering over their head.
And this gets to the very heart of what Liquidity believes. Their whole argument is that decentralized stablecoins, the ones run by code that no single company can control, are way better and safer than centralized ones like Circle's, which, as we saw, can be frozen at any time. The joke was really just a marketing stunt to highlight their own strengths by pointing out Circle's weaknesses. But here's the big takeaway, and it is a crucial one. While the critique itself was clever, the way they did it was incredibly reckless. Because when your joke can move a market that fast, it stops looking like satire and starts looking a lot like something that gets lawyers very, very alarmed.
Okay, so let's do a super quick recap of the big ideas from these three very different stories from the front lines of finance.
First, from TikTok, we're seeing a social media giant literally weaponize its user base to become a financial powerhouse. Second, the Bilt partnership shows us that the quiet, behind-the-scenes B2B infrastructure is what's really rewiring old industries. And finally, the whole liquidity fiasco is a huge red flag, a warning sign about the dangerous collision between meme culture and regulated markets.
And that leaves us with one last big question. In this new world of finance, where memes can have real monetary value and jokes can move markets, where exactly do we draw the line between a sharp piece of commentary and a serious offense? That's something the entire industry is going to have to figure out, and fast.